All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. I am here today, just me and Arnie. We might have Matt joining in a bit, and if we do, then he'll be here. If not, then it'll just be me and Arnie, maybe a little bit of a shortened episode this week of just us two. Oh, well, there he is as we get started. There he is.
Yeah, with the fresh haircut. What's up, Arnaldo?
Well, when markets are down, I also feel I need a hard cut.
Yeah, we have to blame your haircut for this haircut in the market. We got Matt Money. We got Arnie. We'll be here breaking down everything with Palantir. And obviously, we'll talk a little bit about the markets as well, because it has been a pretty interesting past couple of weeks, to say the least. Arnie, let's start with you. Just what's been your raw reaction over the past couple of weeks about what's going on in the markets?
Well, these are one of those cases where even if you expected maybe some wild movements at the beginning, I don't know how interested you were in the markets in 2018. In 2018, when Trump, it was more or less of those years that Trump entered the government. Initially, the reaction was, oh my God, like I remember clearly this day. I was working in the bank, investment banking, and everybody was so depressed in the lift when it was officially announced that Trump was going to be president. And then everybody happy, and later, at the end of 2018, after everybody was happy, there was a period of relatively short period when everything collapsed so badly because there was like the trade war with China, blah, 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 blah. And then, poof, like is one of those moments where if you ask people, okay, but actually what happened in 2018? Like you see the VIX spike there, but many people neither remember what happened. Now, we could be in one of those situations where when you are in, you die internally. So it's like at the same time is painful, at the same time is really what you really want as an investor. So trying to be calm in amid this storm is probably the most important thing. Overall, I'm happy. I'm trying to do a lot of sports that helps me clearing my mind, and encourage you everyone to do the same.
Yeah, find some escapism from the markets. Matt, your general reaction over the past couple of weeks with the macro?
It's definitely been more intense than I thought it would be. Kind of coming into the Trump presidency, I will say that. And we had a pretty at-length discussion on your close today. What I will say is I'm anticipating that there's a bigger, broader plan at work. Maybe that means I'm too politically aligned with the candidate in office. Some people might think that, and that was kind of the reaction we got earlier. But to me, the thing that was most surprising, which I think is what the biggest reaction is so far, being about 18% down on the markets, if you're looking at the S&P, is really the severity of what was kind of put into place for when things go and actually start up on August 9th, which I think is Wednesday next week. So I think, to me, I think it's a little bit overdone. I think that that's the hardest things will be. I think that there's maybe a 5% chance that we have some big retaliatory sort of tariffs coming back on that, and they're probably going to play some like I don't know, Jedi mind tricks and see if we'll even get even more aggressive and see if it'll put us into some sort of recession. But I think overall, what we've kind of seen so far is mostly the largest pendulum swing that I would anticipate seeing, and only things can get better from here. But overall, because we haven't actually seen any actual impacts thus far from any sort of EPS cuts or anything of the like. So to me, before we even start to get to April 9th, I think that an 18 to 20% correction, if not almost bear market at this point, is a little bit too much.
Mm-hmm. We always need to keep in mind that markets hate uncertainty. And previously we had the uncertainty on what Trump could drop. And as Trump said, oh, it's 10% tariff on everybody, it was less than people expected. So, oh, that's great. And 10 minutes later, okay, oh shit. So now the uncertainty is even higher because with these relatively high tariffs, now the question is, okay, but what's the impact? Because 10% here and there is like, okay, is already difficult to really manage at scale to really see the effect of this complex system. But when you're dealing with 30% or so, that completely changes the imbalances. And as we mentioned, the markets hate uncertainty. And even Powell said, oh, look, we need to first assess what's happening before we can draw any conclusion. So probably a little bit of waiting would be needed. But I would ask you something about what's the context about what's happening here, because you're American, I'm Italian. I'm more used to thinking, okay, like essentially where America goes, everybody needs to follow. And there is the hypothesis that these huge tariffs that Trump announced are essentially not really meant to be applied that way. It's more a way of, I play the aggressive game so that I can show exactly how you're willing to play against me. It's like when you play poker, you have a player that has 1 million there in the bank and plays with another million that leaves him completely quiet, while other players have like have a 10K playing. That's a different game. So you know that the big fish is literally setting the rules of the game. So is there the possibility that Trump is just dropping these massive bombs just to let literally everybody sit on the table with him so that he has the leverage to, okay, you want to be aggressive with me? I can show you that if I am aggressive, I can essentially smash you.
I think it's a thesis that's been rolled around for a while. Essentially, summarizing what you're saying is that Trump is trying to be aggressive to get other countries to capitulate first. Meaning China didn't think he was that crazy, and he's playing poker in a way by saying, nope, I am that crazy. And now is, does China call the bluff? Does the EU call the bluff? Yeah, I agree with you. I think he's getting to the point in his presidency where he doesn't care, and he's willing to just put it all out there. And whatever happens, happens. And one byproduct might be that the stock market gets hit.
Well, China needed to answer to show, oh, we are not a little tiny China. Now we have an identity. Now we will fight for for our position in the global world.
And then it just leads into an entire trade war. You're 1000% correct. Let's talk about how this pivots into Palantir. So we'll get into that perspective here. I think we'll start the conversation around valuation, stock price, and an uncertain macro. I'll have Matt start off on this. In an uncertain macro, Matt, 74, already a big drawdown from 125. How are you thinking of that current price right now? It's not at 90 like it was a couple weeks ago. Do you think it has further room to fall?
So I just want to put into context. So the $73 share price is about 173 billion in terms of the market cap. So in my opinion, still a little bit overextended from where we're at, but I think it's getting in the right place. In terms of where it could potentially come down to. The thing that I'm trying to understand here is, the broader market is down 15 to 20%. Palantir is down much greater than that. I would say probably 40%. I'm not good with mental math, but I would anticipate that that's close to 40% down, 35 to 40% down. So my thought process is if the market does correct itself, will there be an opportunity for it to kind of climb back to all-time highs, or would it still drag behind and still be 15 to 20% down because it's already demonstrated? And I feel like what we saw back in 2022 was that as well. It took a while for Palantir to really catch its footing and then eventually surpass the S&P 500. But Palantir obviously taking a large dip from 2021 to 2022 during some sort of pullback. If I remember correctly, we kind of were in the 22 to 25 range and
Yeah.
at the end of 21, and then we dipped all the way down to the $6 or $7 range. So losing about 66 to 70% of the market capitalization of the company before we caught our footing and eventually surpassed the S&P in terms of returns in the latter half of 2023. So anyway, I'm kind of curious if we're going to see something comparable to that. That would probably lead us to more of like the $45 to $50 range, maybe from an all-time pullback of, let's say, 125. And in fact, I'll just do the quick math here. Let's just say 70% pullback. Sorry, the 125 times 0.3. That would lead us to the 30s, high 30s. I think that's too much. Personally, I think with what we've seen with the organization, with what we know that the company can do going forward, $37.50 is a little bit too much. So 70% pullback is probably too much. And here we are right now, 72 divided by the 125. We're at about a 42% pullback to date. So I don't know. Could we see 60? Let me see what 60 is. 60 is $50. So 60% pullback is $50. I think that's actually not bad. No. I think that still gives it a bit of a premium comparative to the rest of the software companies out there while still letting it prove itself. But I think we'll find out more in May. I think, we'll find out whether or not these 30% year-over-year growth rates are continuing to be able to stack. I think that it could be. I think we'll be able to say mid-30s like we did in the fourth quarter. I think that's going to be tough. Another thing that I also want to see is 2 years in a row, the fourth quarter free cash flow has been way greater than the remaining other free cash flow margins in the other quarters. And so what I want to see is that something that continues to persist where the fourth quarter is a large free cash flow margin quarter, and then it goes back down to more of reality. I don't remember the numbers off the top of my head, but it won't be 40, 50% like we've seen over the past fourth quarters, like in 2023 4Q and 2024 4Q. Am I buying here? No. I've actually thought about writing some puts in the $50 range because I think it's free money, right? Like I would like to start picking it up in the $50 range. But I'm also kind of curious what's going on with these markets. Do I blame anybody for entering Palantir here, especially if they don't have a position? I don't. Would I suggest growing a massive position? No, but I think it's an opportunity for people to get their feet wet. Maybe. And if that's if you're planning on holding the company until full valuation, like I'm talking 10, 15 years down the road. I'm not talking about swing trades. I'm talking about, hey, you're going to start adding and growing a position between now and $1 trillion market cap. Because you still have potentially 4 or 5x from where the price is today at 173 billion to capture that. And hopefully eventually we get to a place where instead of dilution, we're getting to a net buyback of stock and hopefully reducing the share count. And, of course, that's 5-10 years down the road, but that's the way I think.
I think it's a fair take. I think it's a very, very fair take. Obviously, we've seen some pain, but Palantir is still pretty expensive still at these levels, and we are in an uncertain environment. Arnie, do you think that the stock deserves to get hit even more, or how do you think of the stock in relationship to the macro?
Well, when you deal with this kind of companies, like very high beta, you should expect that in moments of euphoria, that company the stock goes very well. In the moments of fear, that stock can be hit very, very badly, just because the stock is considered a high beta stock, regardless of how strong the fundamentals, because the reality is probably there are very, very few companies in the world that have this recurring revenue at such a high quality in terms of who provides the revenue and how that revenue is transformed into free cash flow. So recurring high margin free cash flow is exactly what you want to see. And it's great to see sometimes the comparison with all the other big software.
Now, this is the thing about what we're seeing right now on the screen. This is after the past couple weeks of declines, even after all the pain that the market has felt. Palantir is still trading at 3 times the average multiple of all the other software companies. And that's the part where it's just like no one knows what happens to that multiple. If things really get uncertain into the macro, how hard does it compress? Or does it simply have the momentum to sustain it during these times? But I think that's going to be really, really interesting for us to figure out, because it's not something that any of us can predict.
Well, there are two ways of looking at that. On one side, you can say, oh, look, the valuation in terms of multiples is very, very high compared with other software companies. Palantir is now trading at 55 EV revenues, which frankly is a very high number, regardless of how you look at it, which is 3 times the median and the average. Actually, with the median is even higher. But at the same time, if you look at the free cash flow, that is where Palantir is really shining. What we are seeing, especially thanks to the AI deployed internally, the model is really scaling well with relatively few people, with only 4,000 people. The business is scaling dramatically, creating a lot of free cash flow margin. And that's why, for instance, if you look at the same table on the EV to free cash flow, you say, oh, wait a second, the Palantir is now trading at around 100, but the average is 75, the median is 61. It's not that detached, but when you look at how the gross margin is relatively way higher. We're talking about 80% margin compared with around 73. The free cash flow margin is 40% compared with 26, 22. And I would argue that the dynamic is very different. Like what you typically don't really see from these tables that are static is how the business is evolving. Like if you look at the numbers of CrowdStrike, Cloudflare, ServiceNow, Snowflake, like all of them are just consistent, but consistently slowing down as they scale. With Palantir, we have the only case where literally the more the company scales, the faster it gets, while also expanding the margins. So that's why I justify the fact that Palantir needs to keep trading at a high premium. Now, under the condition that is still able to provide this kind of black magic that we always refer to. Increasing speed, like increasing revenue, acceleration while expanding the margin is literally the magic, the key to create value at scale. And that's essentially what also the big tech were able to provide, are also able to provide, that makes your business better as it grows by unlocking network effects. I think by moving a little bit on the valuation side, it's always interesting to see. On one side, we mentioned about the fundamentals, broadly speaking, but also how the sector, the software sector, tends to trade in aggregate. And we see from this table from Jamin Altimeter that we are essentially back in terms of overall software multiples at the bottom that we also reached in 2022. So the average sector, the cloud sector, is still completely smashed. But at the same time, we see the relationship with the 10-year yield, which in reality tends to have a counter effect on the valuation. So what I think is really interesting that is not really discussed now is everybody now is selling a very volatile stock like Palantir to buy Coca-Cola, essentially the real safe haven in this world, because while everything is collapsing, Coca-Cola stays there despite the relatively high multiple. And but if the plan is to smash the 10-year yield, which seems the case, the net benefits in terms of valuation from having a very low 10-year yield are exactly the stocks that have been sold the most now. Because when you make the valuations, if the 10-year is low, you can project a relatively higher, lower discount rate. And these companies like Palantir that are heavily projected in the future tends to benefit the most from having a relatively low yield. Remember that in 2022, the stocks that were hit the most were the ones like Palantir, because they have a high duration, so high sensitivity to interest rates. So if inflation rises and the 10-year yield rises, therefore these stocks with high duration are the ones hit the most. And now what we're seeing is everybody's selling everything apart from Coca-Cola to buy bonds. The yield is decreasing, but the highest beta stocks are the one hurt. And I believe this dynamic is actually what makes these high beta stocks like Palantir, Robinhood, and so on actually relatively more attractive, if obviously the earnings stay strong.
Yeah, it's a fair point. One thing is that if rates do come down as well, Palantir has a lot of cash that they're collecting treasury income on that would be affected. But if their free cash flow margins go up and their operating income margins go up, they'll still be relatively net income positive. So that is another effect of that. The low yields could be good for growth stocks, or it could just turn growth stocks down if we get a recession. But it also affects a lot of stocks like Palantir that are depending on their profitability through treasury income as well. Let's pivot to this question. Matt, I'll throw it at you. Give me your raw thoughts on this. Do you think if the tariffs do go into effect, Palantir is going to get a ton more demand because companies need to figure out how to navigate the tariffs? AKA, are tariffs a tailwind for the business?
Good question.
It's a good question, right? That's a good question.
I don't know. Is it a tailwind? I think yes and no. Yes, because I think that you're going to see some potential pushback against using American software just in general. While I believe that American software is superior and many people will still have to rely upon it, I think there's this fundamental fear of worldwide folks saying, ooh, we need to, let's just say, decouple ourselves from utilizing American software. And
especially if the United States is isolating ourselves from these countries, they might isolate themselves from our software.
Exactly. It's them fighting back in some sort of way, shape, or form. I don't think that that's going to happen because somebody asked us earlier in the close. They were saying, oh, well, we'll just create our own software in Europe. It's like, go right ahead. Like, you've had the opportunity to do that, right? And Palantir has obviously been the preferred choice, and people have tried to leave Palantir, and they've ended up coming back, the Germans specifically, and I think we're going to continue to see that going forward. So, I'd like to see them try, and I wish them the best, right? But I think the regulatory environment's going to be too tough for others. That also said, I think it'll be, so that's my pro and con for what I think could be a pushback as a headwind for Palantir because of the tariffs. The thing that I'm also thinking about, though, and somebody said it directly in the chat, which I agree with 100%, is what might end up happening is need for figuring out better logistics and supply chain, and who's better than that than Palantir. So if that's the case, you might say, all right, well, we can't use Vietnam anymore, right? Mm-hmm. Think Nike. Say we really can't, right? How do we utilizing Palantir? Let's just say you trial Palantir for $50 million, and you say, what's the next best country to be able to set up a supply chain for us to be able to do what we do now, but without using Vietnam? And I anticipate that $50 million would be extremely well spent for Nike to potentially hire Palantir to create that sort of logistics and understand, the best workflows that could happen to be able to have them surpass that. And for people that are not necessarily recognizing, the United States has implemented a 60% plus import tariff for goods from Vietnam. So anything now, I don't remember what it was prior to, but now basically any goods are now going to have to experience a 60% plus tariff. And so for those people that haven't been following, Nike obviously took a huge hit. Midday today, there was the note that Vietnam already wants to come to the table, make a deal, but say that doesn't happen. Say Trump says basically, look, that's not good enough. And really the only company that I can think of is Nike. And to be honest, I don't really like Phil Knight. So he doesn't support me, the typical Trump response, whatever you want to call it, the tariffs stay. So
Yeah.
I think in that respect, you can see a lot of companies utilizing Palantir to help adjust their workflows in that respect. Yeah, and I think that's plethora of different companies. Think Hyundai and
Yeah.
think about all the things that they export to the United States. Think any other companies that utilize steel or aluminum that they import to the United States now having a 25% tariff specifically on that. They might have to source it from a different country. They might have to source it from Mexico or Canada versus sourcing it from, say, Asia to be able to bypass some of the tariffs. So I think it's potentially bullish. That alone with the DOGE thing, which we can get into more touching about later on.
Arnie, go ahead.
I think you said essentially everything. So I would just underscore that on one side, Trump being this aggressive doesn't really put a positive light on everything that is American as of today for the rest of the world. So already in Italy, you start hearing talks. Oh, okay, like if they want to be that aggressive, okay, like F them. And I believe that doesn't really help an environment that is already difficult for Palantir to actually be appreciated for its capabilities, to the point that Germany was even, okay, no, we try to build our own solution. Okay, good luck. And maybe it is also something that is actually needed, again, for companies, governments to try and fail to build something that Palantir has been able to build in 20 years with the brightest people and access to capital. They want to build it in no time. Good luck. On the other side, I believe it is very true that bad things are good for Palantir. That doesn't automatically translate into more revenues in one quarter, but at the same time, it is true that when you have shocks like this, what happens, solve, like first understand how to deal with the situation and then how to solve that is exactly something like Palantir. And I believe literally Palantir right now is in the prime position to show the clients how in a moment of emergency, the software can help. Previously, you mentioned the point on supply chain, and we know that if there is one case where Palantir really shines is supply chain. We saw that many times, and at the end of the day, we consider it like a module that Palantir can help build and potentially scale to all the clients. Imagine how frustrated, how confused CEOs are right now into, first, I don't know what is happening. Second, if I don't really know what is happening, how can I really assess what is happening to my company if different things happen? And third, okay, what's the right decision here? Guess what? Palantir can really help across all these questions. First, understanding exactly how your enterprise is set, and then how the demo that Palantir showed to manage tariffs. You can see like the simulations into, okay, if we adjust the tariffs here, we have this impact. Okay, let's really track where the tariffs are played. Okay, let's see if this is actually the smartest way we can deal with tariff. So literally what is bad is always an opportunity for Palantir. We can think of Palantir is the problem solver, and essentially every problem that arises is an opportunity for Palantir to say, okay, this is just another problem we have already solved or we can solve. Let me help you. And as we've seen with infinite number of cases, it is only a matter of time before, if Palantir succeeds, then becomes a stronger relationships and revenues. So while I'm extremely positive on this to happen, I'm also aware that that doesn't necessarily translate into higher demand, higher, more revenues that we necessarily see in one quarter. But like also with DOGE, that's maybe probably the direction that you wanted to bring us. If the value is provided, it is only a matter of time. And I believe that's the case for something like this, the tariffs, and also what is happening in the government.
Yeah, I think that transitions us well into this final topic we have this week about Doge. So Arnie, you wrote up a really good post on the potential of Palantir realizing their opportunity with Doge. I think we'll do this first. So I want to switch that segment, but I also want to play this clip because we didn't have a chance to watch this. So Carb did have a new clip this week at the AIG Investor Day conference. Let's just share him talking for 2 minutes, and then we'll end it out today with Palantir and Doge.
Can AI outperform a human in what they do in the following way? Can AI make one human 5 humans? So that's basically, if you want to, and here the human is doing something very technical. So, we talk about underwriting, whatever the use case is, you have an expert who's been trained in understanding not just data, but proxy data. It's very hard to teach people proxy. Like, you guys are all watching this, and you have the people who you're very good at what you do. So you're not just looking at what I say, you're looking at inferences for what it means based on years of experience, right? So it's like, that's how you know if what I'm saying is actually going to change your model of their business, right? So like, and so 5 people say the same thing. One is convincing, one's not. And that's how you make all your money. You can tell the difference. You can hear what people, so that's de facto what a technical human is doing. Can the large language model combined with what we call our ontology make one human 10x more valuable, meaning they have 5x more output at half the time? Okay, so that is actually a crazy hard thing to do because you're going to have to figure out where do you deploy the large language model across the decision tree. It's not one decision, just like I'm making many statements and you're bracketing. That makes sense. That turns the dial. That changes something. That's different than what I heard. That is what I've heard before, but because of that, it's commodified. I don't believe it, right? And those are assessments you're making. Underwriters are doing exactly the same thing. So it is a huge milestone if you can actually come in and change the unit economics dramatically. And dramatically is important because there's a huge institutional cost to this. So the question you're going to ask yourself is, okay, or many of you are going to say, I assume I believe them. He's a little crazy, whatever. But you're going to de facto, the next question is this a commodified way of doing things, right? And what I would tell you is it would be if you actually could do it.
Matt, any quick reaction to that clip from the AIG Investor Conference today?
I don't know. He's too brilliant for me. I'll let Arnie go first.
Arnie, go ahead.
Carp is serious when we have not one, but 2 de facto in a couple of minutes. And I want to make one step back into understanding the situation. This is not an event designed to talk about AI, stuff like that. Like, that was the investor day of AIG. So a big insurance company that we know is heavily involved with Palantir to fasten the underwriting process with AI. Correct me if I'm wrong, but that was exactly the client that Sham was mentioning that, we took this process from weeks to seconds or something like that. So when Carp speaks about changing unit economics, was referring exactly to that. With AI agents, 40 plus agents, we are essentially doing what required an immense work into boom. And this has the potential of changing the numbers, changing not only the cost structure, because you are faster, but also the revenues. And essentially, thanks to the help of AI, we expect a dramatic boost in revenues from like 10% CAGR to 20%. What is interesting about this presentation was this other slide that let me poof. Okay, let's see how they generate this big bump in CAGR with some technology partners. And there is a name here that appears literally everywhere. So Palantir is enabling the platform ops, AI applications, AI model garden orchestration governance, data ontology, data pipelines, and management. So Palantir is involved into everything, is not uniquely involved into everything, apart from data ontology, data pipelines, and management, which casually is the one where Palantir really shines, and where us as investors, we say, okay, the true big advantage Palantir has is the ontology, and the fact that there is no other player here. That's a good hint that, okay, Palantir is literally the go-to. And here we can appreciate how Palantir is not just data analytics, is not just AI applications, is not just governance, it's literally the entire operating system that helps you go from this 10% CAGR to potentially 20% CAGR. And the beautiful stuff is Palantir doesn't only tell that, but it also shows that with its own numbers. So personally, I found it peculiar that Carp was involved into an investor day. Like, that's the very first time I see something like that. Oh, let's take a technology provider to talk about our improvements to our investors, because that's an event tailored to investors. Essentially, that was influencer marketing in B2B. Let's take Carp, that now has a peak reputation. Palantir has peak reputation as well. Let's convince our investors that we are doing the right stuff.
Yeah, I think exactly what Arnie said. I think in a more maybe concise point, I look at AI agents that Palantir is kind of trying to implement in the ontology piece, which is obviously helping organize the data specifically. And I view it as an ability to almost extend your person and not have to rely on outsourcing work to different countries. So a lot of this work that may have been done, like background paperwork or being able to process some of those things, might be outsourced to Turkey, India, maybe some of these other Southeast Asian countries. And with that, when you deal with that, you're dealing with different time zones. You're dealing with having to have those interconnections. You're going to have to deal with management across overseas and making sure that those things remain kind of intact and those processes kind of work. Versus if you're doing AI agents and you set it up appropriately, it's working on your time zone. It's basically an extension of yourself. And so you can then pick and choose and decide what part of your day-to-day tasks are actually able to be done through AI agents, through the ontology, through the pipelines that are in these sort of systems, and which ones don't necessarily you need to focus on. And so I think of this very much as a great example. One of the key things that I view as is, and maybe Amit as well, Amit gets most of his revenue from AK Media being in front of the camera, right? And his beautiful face and mostly his jokes. But the thing that Amit probably thinks takes a lot of time and actually bogs him down is the editing. So if Amit were to be able to have the AI agents do the editing on his behalf, if there was some sort of queue or something of the like that would automatically edit Amit's videos within an hour after he's done recording them, and he doesn't actually have to go ahead and do it himself. Now, Amit does a lot of point and shoot, but you see where I'm going with this.
Yeah.
And he could just focus on creating more content. Think about how much more money Amit could make. So instead of spending 1-2 hours a day editing some of his videos, uploading it to YouTube, if he could just be, hey, I'm the guy, I have all that stuff automated in the background, this is how much more content I can make, 1 or 2 hours more content per day, and have that automatically uploaded, he's going to increase his revenues by 20-30%. And so it's the same sort of comparable detail that if you think about it, and it hits home for me massively, because as an engineer, there's so many different things, small little minuscule tasks, that you're not going to hire an assistant for these engineers to be able to have it done. But at the same time, it still needs to get done. And as you shrink the workforce, it's like, okay, well, then are we going to ship those little minuscule tasks over to India, Turkey, Vietnam, to be able to utilize some of their smarts, but also cheaper labor to be able to accomplish some of these things? And then it introduces the issues with having to manage data across different time zones and locations as well. So to me, this is perfect. And I think the example that is given with respect to AIG and the examples I've been shown that how it connects up to an interface like a factory floor where you're having to replace certain sort of items that aren't necessarily in storage in a particular warehouse anymore, and you have to source them from a different one. I think just show the ability that that hopefully we can build this into not just my business at UDOC, but businesses across the globe.
Yeah, and I think that's also the hope of tariffs, right? It's like if that agentic relationship you're talking about is so special to organizations, and tariffs do hit, and that agentic infrastructure that Palantir is building for something like an AIG can be diversified across a lot of other industries, like that should be a tailwind for demand. Obviously, we don't know when that's actually going to play out, but it's a thought experiment to think about in terms of how the impacts of tariffs actually could end up being good or bad for Palantir.
I think it's interesting to notice exactly this. We are talking a lot about AI, more in particular AI agents. This would be the very first time to literally show how these AI agents behave in a shock environment. Because the problem when you have algos running stuff is when everything goes fine. When everything goes bad, then you start really seeing how good the automation is. And our thesis is Palantir is very good at building this stuff and helping clients manage this sort of chaos. And if that is true, that is a huge tailwind, because while everybody pretends to deploy AI agents, but turn out to be just chatbots that brings no value, if Palantir can show, okay, this is a high stress scenario, let us show how we can deploy these AI agents to change the unit economics. Boom, that's a client sold.
Yeah, no, I agree. So now the implications of tariffs over the coming months, I think, are going to be really important to figure out for Palantir. Last topic we got here for the day is DOGE and Palantir. So Arnie, you wrote up a really nice long post about the opportunity Palantir has with DOGE. I'll let you get into the nitty gritty of it, but in sort of a summary, why is this opportunity so special to you?
Well, I was thinking a lot of DOGE, probably because Musk was tweeting a lot, so I always had a lot of thinking about that. And I started thinking a lot, but isn't this the perfect opportunity for Palantir? Like, wouldn't be a great opportunity if DOGE is maybe using Palantir, but is DOGE using Palantir? And I had some reflection on that thing, but I personally think Palantir could be involved. But then the day after, I realized, okay, but wait a second, is that the really important question? Like, is DOGE using Palantir? What if the real important topic is not, using Palantir or not? What is happening in the government right now due to DOGE? That is the really important topic. Because imagine you are a government official, then you have DOGE essentially going against you, trying to understand what do you do? What have you done this week? And that creates an immense pressure to actually show value. So show efficiency. So if previously you had the doubt, oh yeah, maybe I should hire more people. Now hiring more people is not the answer. And we know that the government has essentially lived with a paradigm, oh, we have a very small problem. Let's hire more people. Let's hire more consultants. Let's go to Deloitte, Booz Allen, and so on. And the real effect is Palantir is still a tiny player in the government, despite we are aware that the government is a big chunk of Palantir's revenue. Palantir is around the 80th player on the government tech provider, if we exclude like the pure DoD stuff that we don't really know how much the impact is. But on the grand scale of things, Palantir is still a tiny player in the government. And what we know for sure, thanks to DOGE, is the signal. Like previously, you had problems, you hire more people. And now you can do that. Okay, how do you solve that? You need to change the way you think of technology. And that creates a huge tailwind for, okay, let's see who are the providers that actually provide value. And the fact that Palantir was not mentioned when Elon Musk showed, okay, we cut here and there on the software side. There was a lot of software providers, including ServiceNow, which was providing essentially 35,000 licenses that were never used. Palantir was not mentioned there. So regardless of Palantir is being used by DOGE or not to identify anomalies, I believe the key important thing is the government now has the priority, has the need to show to its taxpayers that the priority is we provide value, and how they provide value with lower people is by deploying AI. So we see the administration is much more open to software than the previous ones, and that is a huge tailwind. And if this is true, that the pressure is real, also the opportunity for Palantir to show this value is actually increasing. So not a guarantee, but I see the huge tailwind that Palantir actually has to convince the government of, okay, this is the opportunity to really build an entire operating system of the government. If we want to be competitive at scale, we need to deploy AI in the same way we do for the commercial clients, from a lot of people to 40 agents. Imagine how huge the benefits of a potential ontology of entire government could be if already for a company that is big but still relatively small compared with the US government can achieve insane return on investments.
Matt, your thoughts on if this opportunity with DOGE is real, and also do you actually think it materializes over the next couple of years?
So I think Arnie, the last 2 sentences that Arnie said, I think is what I want to build on. I agree 100%. Palantir's whole MO, specifically from the commercial side that I've been involved with over the past 7-8 years since we started at UDOC and have kind of grown, and is exactly for this particular thing as well. The disparate data systems that are stored, not just within different parts of an organization, but also globally. And now that we are becoming more of a global economy and data is stored in the cloud and being able to be pulled from wherever and whenever, the use of something like the ontology that was able to potentially match, contracting money flows, where that is all kind of going, the relationships between all the data of all these different disparate sort of sources before all being rolled up. I mean, my hope is that the only software that I can think of that would be the most beneficial would be Palantir for DOGE to use. But if not, the thing that I'm thinking about is, and this always goes back to, down the road, where do I see this potentially happening? If they aren't, and they're legitimately manually going through these opportunities, my hope is that they take the opportunity to say, what can we store? What data can we use to set up some sort of central database that then uses Apollo to give and grant, different agencies different parts of specific data? And I don't think that people fully recognize the beauty of what ontology can really give. Like, if you were to think that your account number can be sourced to a specific company that can be sourced to, and it seems so easy, right? When we talk, we think this way, like the order of operations of this account number belongs to this person that belongs to this, that eventually is feeding into this part of the government, let's just say the Army. Well, that data is then stored in the Army database, and it's not necessarily seen by the CIA, the FBI, NSA. And so if you then have this central database to say, okay, we're about to pay this person, right? This account number is what they said to give us for this PO number. Do they have any other things out there? And you can see this account number is attached to this particular company, is attached to, like, if you were to just input that into an Excel spreadsheet, there's no relationships. There's no ability to say, okay, this belongs to this. It's just, you can do whatever the hell you want. Versus if you were to actually appropriately set up the data flows, the pipelines that actually come through, see where all the different money sources go, and actually build that into your workflows, then I think it's going to have tremendous opportunities. And if they ever needed to go back and do a DOGE ever again, it's extremely simple because everything has relationships, everything's already built. And so my hope is maybe it's not involved today. I give it maybe a 25 to 30% chance that it might be being used today, maybe slightly more, because I know Elon and Karp have a good relationship. But I've never seen them having a working relationship, and I think that's another step that I think needs to be kind of put. Although I've heard rumors that SpaceX uses Palantir, but that's a different story for a different day. But I hope in the future, this is something that I've always had in my mind, and I've always thought of for the past 2 to 3 years, is all the U.S. government is ripe for using Palantir, and not just in a single army, single Department of Defense, but the entire use of all data and storage of data should be utilized in the government, and then hopefully we can use that. And I've also said that before about healthcare, right? If you go to an individual hospital, they should, especially if it's operating off of Health 365, if another hospital is using Health 365, then they should have the ability to access the data very simply. You shouldn't have to wait for that data to be transferred from one hospital to the next for that particular data to be available. I think it should just be, hey, your history is your history. And if you're part of the US health system, yes, you have to apply, and you have to, make sure that you go through the right allowances to get access to that data. But, all that data should be stored by Palantir.
Mm-hmm. Sometimes I wonder how it is possible that Palantir seems to be in the right place, in the right condition, because now we are talking about updating the government, and Palantir has been already working with the government for many, many years, so many proven use cases. And we have evidence that what Karp was saying about, okay, you have too many people, okay, on one point, but too many data sets that don't talk with each other is actually true, because now we have even Elon Musk saying exactly this. Like, let me show you this clip.
In the context of the government, we're moving like lightning. In the context of what I'm used to moving, it's slower than I'd like. So what seems like incredibly fast action by government standards is it's slower than I'd like, to be totally frank. But we're all making solid progress. A very sort of thorny problem, a tough problem, really it's kind of like painful homework, frankly, is reconciling all of the government databases to eliminate the waste and fraud. These databases don't talk to each other, and that's really the source of that's the biggest vulnerability for fraud, is the fact that these databases don't talk to each other. So we need to reconcile databases. It's a frankly painful homework, but it has to be done, and will greatly improve the efficiency of the government system.
So government
it just sounds like that's built for Palantir.
That screams Palantir. Because if there is one thing where Palantir really shines, is digesting, integrating all the data to have a clear picture of what's going on. And now, if there is only Elon saying that, is one thing. Elon is now personally involved with DOGE, so he has the incentive to make some drama of, nothing works here, to show he can actually do some work that is useful. But then when you start hearing other voices saying something similar, like here.
So they want to have all the computers talk to each other. And the way I understood it is this: if you are a fraudster and you call up and you say, this is Social Security number, I am such and such person, I need an SBA loan, you get it. The problem is that person's 9 months old and you're somebody different. Well, how would you know that? Well, the reason why you don't know it is because Social Security, where your age and you're logged in when you're born, is not talking to the SBA. Right. Now the computers are all getting linked together, and it's going to light up and say, you're 9 months old, you're a fraudster, you're under arrest. We're certainly not going to write the check. So they want to have.
So, what to say?
Sounds like you need something like Palantir.
You need an ontology.
Yeah. It's going to be really interesting to see how this plays out over the coming months. Obviously, we got all the macro uncertainty, and that is one element to the story. But then it's a question of Q1 earnings. I think they're going to crush it. I think you guys think they're going to crush it. Will it be above 30%? I think so. Will it be 35, 36? I don't know if it gets that high.
Yeah.
I don't know if that's discounting it, so we're going to get 40. Like, I think there's so many variables there and so many questions. All I can say is I think if we do get a stock price decline after earnings, I think it's not going to be Palantir's fault. I think they're going to put up good numbers. But I do think if the macro gets ugly, the numbers might not be good enough.
Let me ask you this. Do you think with this tariffs thing, is the AI narrative compromised, stepped, like paused, or maybe it could be even augmented?
I thought about that today. I'm just like, what if the market says, we don't care about AI anymore? And we're not like, hopefully that doesn't happen because there's just so much progress with robots and this and that. That's undeniable. Like, it's still top of mind. But if the market starts ignoring that as a concept, I mean, yeah, that could hurt as well.
Is something, sorry.
So
Go ahead,
no, I want to hear Artie's finish his thought. Yeah.
So the ancillary question is, can Trump, the government, really allow the AI narrative to stop right now? Because if not, there is a sort of a hidden put, like Tom Lee likes to say, that this AI narrative needs to continue to actually support the innovation program that makes US the leading force. Without capturing this AI opportunity, which means also letting the ecosystem continue to grow and not killing completely this process. I strongly believe, like, now I can be extremely biased because I'm very long, that Trump can't let the AI narrative to stop, because the AI narrative is what makes the entire flywheel of the US dominance actually work. Without capital markets, without IPOs, without Silicon Valley, the US would not be the US. That's the key strength, and you can't just cut and destroy your competitive advantage. So I'm interested in your points.
I would say I don't think that there can be a slowdown, especially if we actually are going to follow through with these tariffs to the extent at which we are, and are going to force people to insource to the United States for manufacturing. We will have to utilize AI to be able to get margins in a way that we can make it affordable to purchase American goods. Now, I think that that's a bear case, in the fact that, like, I think there's going to be, in the case where there's going to be a lot more insourcing, but I still believe there is going to be some insourcing overall because of this act, just like I think we saw in 2018, 2019, and 2020, because of the information and the tariffs that Trump had put into place. And so I think that you're going to need more AI and more use of artificial intelligence if that were to be the case, to make it slightly more competitive. But going back to the other piece that I was kind of thinking about, I wanted to go back to what a bit was kind of referring to, with thinking that Q1 will knock it out of the park. Well, I think revenue growth might be good. I'm still questioning, and I actually shared, I don't know if you're able to see it or not, the graphic that I've kind of put in the background. But the thing that I'm kind of curious about, once a year, it looks like that the free cash margin blows up. And I kind of referred to this earlier in the chat. Is it able to share it, or am I going crazy? Okay.
Yeah, there it is.
So you'll see the orange line, which is the top line that everyone's kind of looking at. That's the cash from operations. It's not exactly free cash, but it's pretty comparable. So you can see it ranges anywhere between 10 to 20% normally, and then you'll have a spike up once per annum where it's kind of gone up to the 36 in the first quarter of 23. The fourth quarter of 23, it ended up at about 50%, and then more recently it showed up at 56%. So I'm kind of curious, what we have seen is that once or twice per year spike up, and then it kind of comes down to this normal. And there is a general slight increase up and to the right since 2021. So I'm not saying that, we're going to go back to single digits or something like that. If anything, we're going to go back to the high teens, low 20s if it does retrace. But I guess my curiosity is will they be able to, kind of like what we're seeing from the adjusted income from ops here, that beautiful trend line from going from negative 14 in the fourth quarter of 2021 to 16 in the third quarter. Now, of course, we know the income didn't look so hot coming in into the fourth quarter because of everything that kind of happened. But if you kind of remove the fourth quarter from that, and you just look at the beautiful trend line that we have in the red, it's very like you can draw a beautiful trend line through that. Versus it's a lot more difficult. And Arnie showed earlier, yes, you do get on a trailing 12-month basis a very favorable free cash flow margin. But my fear is maybe we end up in a lumpy quarter on the downside, and eventually, people were thinking that free cash flow might be X, and in reality, unfortunately, it just doesn't end up that way, and we end up in maybe the 20 to 25% range. And then if that's the case, you end up with half the free cash flow margin in the quarter that you were expecting, and it might put you on the bad foot on the heel of, let's just say, because now we're only about a month away from these earnings coming out. Do we actually fully recover at that point? And if that's the case, and if you only get, say, low 30% or maybe even high 20%, you could see this thing really not show up. But I'm cautiously optimistic. I think that we're still in the 30s in terms of revenue year-over-year growth. But that free cash flow margin is always something that I've always been scratching my head about over the past 2 to 3 years. Why is there a spike? Because to me, I think it might just be you get a lot of influx of capital and maybe the fourth quarter or first quarter, and so you're able to realize all of that cash. And
you don't think the spike is sustainable for the free cash flow margin?
I just don't know yet, right? I think it's hard. Like I'm trying to understand it, and maybe it's a question that I'd love to ask. One of the more financially savvy folks within the business, because the income, obviously, when they actually show that revenue coming through, if you look at the adjusted income, it's a beautiful trend line. But you get this big lump of when the actual cash is able to come through. And so I'm like, okay, so are these just when the big deals are signed? Like, was that 1Q deal? Am I thinking, was that the NHS? Maybe that was the fourth quarter. Like, what are these big lumps of capital coming in? And then what causes it to go back down? Is it just normal operations or what have you? I'm not smart enough to know. And so I would just like to kind of get that, because I could be completely wrong. And because I don't know, it makes me wonder.
Mm-hmm. Well, I think it is important to always remember, like, what's the difference between what we think of free cash flow and what is actually the adjusted EBIT that we see in the presentations. Because what you say is absolutely right, that the free cash flow, while it is stable on the last 12-month basis, on the quarterly basis has this wee whoa. So
you need a soundbite that.
I need to soundbite that. I need to make that my ringtone every time I get a text message. Like, that was the best thing ever.
While on the EBIT margin side, we see consistency. So how do we match these two things that seem not to talk each other? And it really depends on essentially how you collect those bills. Think of a big client like the company where you work at. This company probably doesn't pay Palantir every quarter. Probably they pay every year in a certain period of the year. Let's say it is December. In December, your company pays 50 million to Palantir. What happens on the free cash flow side on Q4 when you receive this payment? So from the Palantir's perspective, on Q4, when the client pays this 50 million, Palantir receives 50 million, and there is a cash inflow that is recorded in the cash flow statement as, oh, we receive 50 million. But on the income statement side, you can't write, oh, we receive 50 million. You received 50 million divided by the quarter.
Precisely.
that you are actually deploying, like you're deserving to receive that money. So it's like the free cash flow statement records the money that is actually entering or exiting the company. On the income statement side, so what we see in terms of EBIT and revenue, and then also EBIT adjusted, therefore, is the value that is deserved to be written given the work that you have done. So in essence, if the company pays every quarter a little bit, there is no difference between the revenue and the free cash flow. If the company pays in 1 quarter, let's say the first quarter of the year to cover the entire year, you have free cash flow in the first quarter, but has a spike, no free cash flow in Q2, Q3, and Q4. On the revenue side, you take that 50 million and you divide it by 4. So first quarter, you have that 16 something, second quarter 16 something, third quarter 16 something, and then again. So free cash flow has a spike, revenue is completely spread through the quarters that relate to that payment. And that's why I personally check more the EBIT margin side rather than the free cash flow on a quarterly basis. Because unless you look at the last 12 months, you have this effect of the payments that makes you do that. So
I think that one might be better of it.
I think that one was better.
You got me intimidated.
But yeah, I mean, I'm just surprised that with a company that's receiving almost $4 billion this year in revenue, that it's not more flat. And maybe the last two quarters it did show up above 30%, and this last quarter was 50 something percent. So maybe it's not going to be as lumpy going forward. Maybe it will even out and kind of be closer and hovering around that 40%, like you said, on a TTM basis. So it's definitely something I'm going to be watching. But to me, like, I'm a person that loves to see steady cash into a business, and that lumpiness, I don't view Palantir as a cyclical business, and if it continues down that way, I should think of it slightly more, knowing that they will get their contracts in, but on a quarter or maybe 2 quarters per annum. But I would love to see that hover, 35 to 45 to 35 to 45, rather than the spike down to 20% and then going to 35, then to 50, then coming back down to 20. So anyway, maybe I'm putting too much into it, but
let me check a little thing. Okay, yes, here we are. Let me show the screen here so that we can touch on this. So from this chart, you can see the free cash flow margin of Palantir on the quarterly basis compared with here I have Salesforce and SAP. We can even add more companies, like, let's say, ServiceNow. And Snowflake. So you see that each company has its own variability, because, for instance, if we only see Salesforce, no, this is Snowflake. So you see, even Snowflake goes from 40 to 9. Then we have ServiceNow, but look, is even more dramatic, from 55 to 14 to 8.
You're saying it's a trend for a lot of these SaaS companies.
So that is, how can I say, a feature of this recurring revenue model, where yes, the revenues that you record are absolutely stable, but the cash you receive, it really depends on, okay, when the customer is actually happy to pay you. And then there is also some strategy. Maybe some clients prefer to pay you every quarter. Some clients prefer you to pay 1 year at the beginning of the year. Other clients prefer to pay at the end of the year, because that matches better the way they organize the budgets and so on. So there is a lot of, how can I say, discretion on the company side to actually say, okay, when do we actually pay Palantir? Maybe there are even some contracts that, okay, if you pay me 2 years of contracts now, I give you 10% discount, stuff like that.
No, I appreciate that. That's helpful.
Yeah, and it just means that Palantir's free cash flow margin could go down the next couple quarters then, and then eventually spike back up. But definitely something we have to look out for in Q1 earnings.
But
That's
Arnie's
why-
right. That doesn't mean that the EBITDA margin is going to go down.
Correct. Yeah.
No, that's why it is really important when we check the numbers to pay a lot of attention to the EBIT adjusted margin. While a classical value investor would tell you, "Oh, never look at the adjusted numbers because Buffett said adjusted means suck." You actually need to look at that to have a sense of what is the normalized free cash flow that is generated, because the EBIT adjusted is essentially the revenue minus the cash expenses, which is a proxy for the free cash flow. Because after that, you have stock-based compensation, and essentially you reach the net income.
Yeah. And obviously, we know SBC is 20% of revenue at the moment. So
Yeah. All right. Good stuff. Thank you, everybody, for joining us for episode number 210 of Palantir Weekly. We got a lot of new things to deal with in the macro with all these uncertainties, but we'll be covering it every single week. I think we have earnings in mid-May, so we're still about a month away, but we will be here live for earnings once we're there in about a month.
It's probably good it is.
A little bit of time to see if we can figure this stuff out. Yeah, I agree. All right. Thank you, everybody, for joining. We will see you next week on Palantir Weekly.
thank
All
you
right,
all.
everybody.
Yo.